But stablecoins make a lot of these things easier, right? So they give you almost like banking as a service out of the box. You get the ledger on-chain, you get transaction history, you get all these things pretty much out of the box.
That's Max von Wallenberg, CEO and founder of Iron, a stablecoin payment API made specifically for developers. With his deep background in European banking and fintech, Max is at the forefront of integrating stablecoin infrastructure into large institutions globally. In this episode, we dive into the evolution of Iron, the regulatory and banking challenges in on-chain fintech, and the growing importance of treasury management use cases for stablecoins. Max also shares some insights into the upcoming MiCA regulations, go-to-market strategies, and the appeal of building on Solana.
Season 1 of Stable Minded is brought to you by Layer 1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer 1 is their latest innovation. Designed for businesses ready to harness the power of stablecoins, Layer 1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. Next season, we sit down with Johannes Kask, Managing Director of Layer 1, to talk more about it. So stay tuned until then.
All right, Max, thank you so much for joining. How are you?
Well, thank you. Thanks for having me.
I am super excited to dive into all things Iron with you. We have probably a ton to talk about. There's a lot that I'm sure you're building behind the scenes. If anyone follows you on LinkedIn or Twitter, they probably have a little insider information on what you're doing. But yeah, really, really pumped to have you on. Why don't we start with your introduction, your name, what you're building, a little high level about Iron, and then we can dive in.
Oh yeah, my name is Max. Great to be here, and founder and CEO of Iron. We're building enterprise-focused stablecoin payment infrastructure. So basically enabling banks, fintechs, PSPs, regulated enterprises, corporations to use stablecoins for cross-border money transfer, treasury, and anything else in their stack.
Lovely. Okay. I want to start with your background. I'm looking at your LinkedIn, and I know this is our first conversation, but you seem to have an incredibly impressive background in the world of finance and also starting other companies that you've been leading and have sold to other companies. This is not your first rodeo, as they say. Give us an overview of your journey as a founder, as a leader, and what you were up to before you started Iron.
Yeah, so I spent the better part of my life in finance. Whether that's a good or a bad thing, I don't know.
You're still here. You're still smiling. You made it.
I'm still smiling. Funny enough, I joined realms of finance 2006 when I joined Lehman Brothers of all banks. So exciting time. Joined their trading floor in the commodities desk, selling structured products, options to corporates in Europe. So think about Lufthansa that does fuel hedging. They do a lot of like fancy option structures, and these corporates are actually very advanced when it comes to their treasury infrastructure. So that was my first job. Super exciting, but also extremely focused, right? Like a very narrow field. And decided to leave Lehman about 2 years in, just shortly before the crisis, simply because like that job for a 22-year-old was just way too narrow, I would say. I wanted to like have a more broader horizon. Joined Michael Porter's firm, which is Monitor Group. Did 2 years of consulting, pretty much general management consulting, very interesting. And went to Harvard Business School in Boston, lived 2 years in Boston, did my MBA there, and then went the entrepreneurial route and never looked back. So after my MBA, went to Germany and back to Berlin and started a brokerage called Uptick, which was actually a kind of a precursor of Robinhood Trade Republic. It was like a mobile-focused trading app, more focused on more advanced traders. And people that kind of, do a lot of day trading actually, focused around like stocks, Forex, and then kind of 2016, 17, crypto just exploded. And then that's sort of when I fell in love with crypto, very much as a speculative trading asset. So I'm a trader at heart. So love that asset class. And, those volumes were pretty crazy. The brokerage got acquired by a German asset manager in 2018. And afterwards, I then joined a German stock exchange called Börse Stuttgart, which is Germany's second largest stock exchange, and built their crypto exchange, their institutional crypto exchange called Börse Stuttgart Digital Exchange, BSDEX. Led that company for only a year. 1 year in the corporate world was, for my liking, a bit too much, and then kind of got drawn back into starting companies again and started Unstoppable Finance in 2021. Actually, and built a wallet called Ultimate, which some of you might know. It was a DeFi and trading focused wallet in a Solana ecosystem. We launched the wallet 4 days before FTX collapsed. So talk about shitty timing. Had to obviously fight hard with the board, etc., to stay on a Solana track. Seeing that token basically, evaporate, and losing pretty much all of its value. I had to fight hard, but we always were big believers in Solana as a platform, as an ecosystem, and built the wallet, launched it, scaled it pretty rapidly in the Solana world. But about 2 years in, we just realized that winning the game against the Phantom, Soulflare, these really strong established wallets was incredibly hard. B2C is a very tough game. I think we have the best trading focused product in the market, but it's not always the best product wins, but actually the best go to market. So we decided to pivot the company and focus more on, actually wanted to build a bank, funny enough, an institutional crypto bank called Iron Bank. That was sort of the genesis of Iron, we'll come to in a second. And the wallet got acquired by Jupiter Exchange, which some of you or most of you might know. And they since relaunched it as Jupiter Wallet. So it's great to see that thing is still alive and kicking, and they have the distribution, they have the trust. So they're doing great things with it. So pretty excited to see it now in the light. And yeah, actually built Iron Bank for about 10 months, which was an institutional crypto bank, sort of like a Silvergate of Europe. But then kind of 10 months in, we realized, man, that bank license process is really, really long. It's not like a year and a half as we originally were told by regulator, etc. It's more like 3 to 4 years. And then seeing stablecoins explode, payments, which was anyways something that we as a platform as a bank were very, very focused on. We decided to actually pause the bank license and focus fully on building a stablecoin payment infrastructure for institutions and corporates, the world we know extremely well. And here we are.
Wow. What a journey. I mean, this is all within not that long of a time. I mean, this is less than 2 decades of work. I mean, this is an incredible amount of
I'm getting some wrinkles here, so you can't see it on the podcast. So.
Good. It's an audio. It's mostly audio. I'm sure people are just going to be listening, so you're off the hook on that one. Well, what an awesome journey. So you've spent, it seems like you've always been drawn toward building your own stuff, building and leading your own products. You've had to, you've gotten pulled into some of these big companies or through these acquisitions or pivots. You've found yourself in these big, larger companies, but you seem to really be drawn to the idea of building something from scratch. And seems like you in that journey are really comfortable with pivoting and knowing how to react and sort of bob and weave based on the market conditions. I'd love to know, just specifically with Ultimate Wallet, when you launched this, it sounds like that was a pretty crazy time when was that your first crypto focused company that you came out, first product that you launched? And you said this was 4 days before or after FTX collapse?
4 days before. Yeah. So,
my goodness.
And we've been at the Solana breakpoint at the time, and it was the wild. Really interesting. I mean, these Solana breakpoints are always, when people are, obviously I love that ecosystem, but when prices are up, people are obviously even more ecstatic, right? Yeah. It was pretty crazy to see.
Yeah. So for this podcast, for those who might be listening to it for the first time, Stable-minded for us is really focused on the infrastructure layer of on-chain payments and less about the speculation side of crypto and way more about the utility and settlement and payments landscape of crypto on-chain. And I'm curious, just from your perspective, you said back in 2016, 2017, with your background in trading and doing a lot of these sophisticated options trades in your early career, the speculative side of crypto and just what was going on there. I think around the same time, myself personally, that's also when I got really into crypto, just seeing the price action and movement. I was like, whoa, what is happening here? How, for you getting in and being originally fascinated with that side of the industry, what was the transition like for you going from, more of that sort of trading, speculation, price movement focus to what you're doing now, which is what it looks like, very different than that, very stablecoin focused. What has that transition been like for you?
Yeah, first of all, I think that the trading speculation side of crypto really enabled the world we're building for now. Naturally, when there's a lot of money to be made in trading and lost for some, of course. There is inherent like a lot of bandwidth requirement by our system for it. So, and kind of the last couple of years with like really crazy trading activities, and also with centralized exchanges, like really prepped us for now actually having very robust payment infrastructure, which stablecoins can actually thrive on. So the more enterprise focused world we're going in with Iron actually requires like very large throughput and very sort of mature systems. I mean, Solana had its in its early days. I think they still have their beta tag on. It's hopefully soon going to come off, I think Toli said. And they had problems with downtime, right? And some people knew Solana for, oh, that's the chain that's down, which is not the case anymore, right? Like it's been super stable. And like sort of the whole like speculative frenzy of the market really primed this infrastructure for a payment use case. And in this case, I'm quite opportunistic here where I see stablecoins as like a step change in infrastructure that will enable huge mass use cases. And I love building products that can traverse into mass usage. And I really see stablecoins as one of the killer product market fits of crypto. And, when I'm at heart, like I'm still a trader, and we're doing a lot of trading stuff still under the hood, sort of building a market maker. And I can come to this in a while, which, rebalances kind of global portfolio, like global buffers around the world so we can enable real-time payments. There's a lot of like trading related things that go on in a company such as Iron, which people might not see. You might think, oh, I'm just transferring, $10 million across the world. Well, that actually requires managing order books of exchanges, managing market makers, liquidity, and like all the stuff I grew up with over the last couple of years, which really helps now actually providing fantastic experience. And I can show, we have this internal motto, every bit matters. I should wear this hat. Yeah. So
That's
payments,
amazing. For those who are just listening, Max is showing a pretty snazzy baseball cap that says every bit matters. That's cool. I got to get myself one of those.
Yes, I will send one. So in payments is a thin margin business, right? So, and if you know how to navigate on-chain systems well and liquidity, like those bits stack up and make for a much better experience for end customers.
So let's dive into this. It seems like we've arrived at a really interesting point of your journey where you have this incredibly robust, experienced founder story where you've started and sold these businesses, some of them in crypto before, in the wallet space, in the trading space. It sounds like the first part of Iron was really focused on this banking use case or more of this like licensed custody model. You mentioned that has been something that you've pivoted and gone into more of this enterprise developer focused payments landscape. Talk to us a little bit. I want to dive into the details of what you're building around what you just described, but would love to know more about the journey that you went on in the beginning with Iron and the sort of maybe the roadblocks that you faced, the pivots you made. Would love to know more about that. What sounds like a 12-month period that you were in?
Almost, yeah. So it was 10 months. So Iron Bank originally was supposed to be, we called it the world's first on-chain bank. And this is a term that's actually used quite a lot by the industry, also by wallets, enterprise wallets, etc., which all say, well, we're on-chain banks. And I agree. Like I even wrote like a post about that the other day, like the rise of on-chain banks.
Yeah, I saw the OPS or the
OPS
on-chain
stack.
payment.
Yeah. The on-chain payment stack. I can talk about this in a while, but Iron Bank was actually building an entire proper core banking system on-chain. So we weren't using legacy core banking systems. We rebuilt this with a really interesting stack where every fiat deposit that comes into the bank would be converted into not a stablecoin, but a deposit token, so-called like commercial bank money tokens, which are not tokens which are transferable to other banks, but they would be internal in our system. JP Morgan does something similar with their JPM coin. And Onyx, I think now it's called Kinesis, I think. They rebranded that. I wonder who won that lawsuit against JP Morgan claiming the Onyx name. I mean, this guy needs to have big balls to go against JP.
Probably wasn't a cheap lawsuit to pursue.
For sure. So we built this, and actually it was a risky move because regulators don't like new infrastructure. So if you come to them and say, we're using off-the-shelf core banking, we're using all the systems that you know, then they tend to approve stuff easier. It wasn't the case with us, so it wasn't a tech reason why we paused the bank license. it was, in general, just took too long. But the reason we went for everything built in-house with a very on-chain focused product was that we had this, vision in mind where a market maker, exchange, stablecoins, etc., could integrate with their bank the same way they would integrate with an exchange, with like a protocol, right? So literally you can connect to your bank using Wallet Connect, right? And you would just add it as a new network, and you simply can connect your bank fiat the same way you would interact with any other token. So that would have been really revolutionary in the way that like how you kind of use banking, kind of fiat in an on-chain world. So I'm not saying we're not going to do this at some point. I still think it's a fantastic idea, but just given the time to market, a full bank license requires a lot of work and time. And I think the next 2 to 3 years will be a pivotal land grab when it comes to stablecoin infrastructure and payments. And sitting this one out and waiting for a license is not something I'm comfortable with. So
Yeah.
hence.
And where were you the last 10 months or in that journey? Where were you trying to become licensed? I think you're based in Berlin or Germany, if I'm correct.
Yeah.
Tell us a bit more about like where you have been focused from a regulatory standpoint and your just current take as it stands today. We're talking mid-November of 2024 of the current regulatory landscape right now. I'm curious to hear your thoughts on that.
Yeah. So Europe is pretty homogenized when it comes to MiCA registration. So you can basically pick any country in Europe to get regulated in. Some regulators are stricter or more crypto friendly than others. We picked Liechtenstein, so we didn't pick Germany. Germany is just notoriously slow when it comes to, anything crypto adoption in terms of regulatory cover. I'm not saying it's not possible, but it will take a very long time. Liechtenstein is a very small country, 40,000, almost a city-state, if you will, but the regulator is very crypto forward. They, are easy to work with. You have a direct line of communication. You get direct feedback. That was very good from a process perspective. And we just looked at a couple of jurisdictions that would fit, and Liechtenstein ticked all the boxes. They will be within MiCA in 2025. So by the time we would have had that license, and we could have served kind of basically entire Europe with our offerings. For us, that worked really well. And it's really critical, especially when you want to build something more on the edges of technology, that you have a regulator you can really talk to and interact with, rather than kind of quarterly snail mail back and forth, which some other regulators have.
And for those who aren't familiar, MiCA is this really, really groundbreaking legislation that's coming out of Europe that has been in the works for quite some time. I think in some ways, it's some of the most forward and clear cryptocurrency legislation that's coming out. And so this takes effect top of the year 2025, if I'm correct. And a lot of companies in the space have been spending a lot of time becoming compliant with this as sort of the first major, in some ways very ahead of the US in terms of clarity. And so this takes effect here in the next few months. So how do you think that's going to impact? I know it sounds like you guys have pivoted a little bit, but just while we're on the topic, how do you think MiCA is going to impact the innovation within Europe and within companies and founders who are building? What are you seeing happen within that landscape right now?
Yeah. So I think one of the biggest upsides of MiCA is going to be the fact that banks are more open to, and banks and institutions, put that way, right? Banks, institutions, PSP are more open to using crypto, or can use crypto, right? Because in the US, so one of the big problems is that you have basically lead bank and CRB, those two that are banking the entire stablecoin payment space. There's a couple of others, but like those are really the biggest games in town. And in Europe, like the bank landscape is a lot more diversified. So if you want to build like institutional grade enterprise focused use cases, you need a strong banking layer to support it. And Europe has that, especially with MiCA now, that banks are actually able, from a compliance perspective, to fully use crypto assets, right? So MiCA compliant crypto assets it is. I'm less bullish in the short term Euro stablecoins. It'll take time. Bullish long term that like they will become a really, really important part of the value chain of tokenized asset trading and settlement. Payments for sure as well. But in the short term, they're struggling to gain adoption simply because, some US dollar stablecoins are actually compliant in Europe. So USDC is compliant in Europe, MiCA compliant. So you're able to kind of fully transact with USDC. I don't know whether, people might not know, but like these rules actually got changed. There was a really big, push by Euro stablecoins that, where MiCA compliance actually said like you can't use US dollar stablecoins in Europe anymore because the volumes are too high. Last minute, these volume definitions got changed. So trading volumes are actually excluded from the volume limits of US dollar stables. It's only payments for goods and services, which are included in these volume limits, which are not that high yet for US stables in Europe, which means US dollar stables are now kind of very MiCA compliant in Europe. So I think that's a really, really, from a regulatory perspective, it's really important that we have a clear rules and regulations set up here, which is also one of the things that we as Iron are very bullish on, because we can basically build into this institutional segment way easier than.
Yeah. Let's talk more about Iron. So you are building right now. Where are you currently at in? I'm looking at your website right now. It says get early access. Are you actively onboarding? Are you pre-launch? Do you have companies actively using this and testing this? Give us a pulse of the current journey of this.
Yes, so we're launching in January, so early January next year. So we're pre-launch right now, and the website or the product has been up for a couple of months now, and we've been surprised by the amount of interest. I mean, I'm pretty active on LinkedIn and Twitter, but still, like, we got north of 100 companies that approached us for stablecoin payment rails, both in Europe and also abroad. But one of the biggest needs is actually Euro rails, right? Like get USDC into Euro to pay, get Euro on chain to pay others. So there's a big demand for this, and we also see bigger institutions approaching us, especially since the Stripe deal, that ask, hey, what's going on? Can you tell us more? We're looking into this and let's talk. So January, we're going to start onboarding customers. We're already beta onboarding customers today. And January, we're going to go live with a few lighthouse customers.
So we're a couple months away. So you have a pretty large set of companies that are interested. It seems like you've defined, at least right now, a niche with USDC stablecoin to Euro access. Maybe we can back up a second. So for the business, when you think about these 100 companies that are coming to you and they're interested in using the platform, what would you say to them is the most valuable part about using Iron as a service? So the website says very simply and very clearly, which I know you've talked about how intentional you've been about this. It's stablecoin payment APIs made for developers. For those 100 companies, what are you finding is the most valuable part of Iron that you're offering to them? What are you seeing right now?
First of all, we're focusing purely on infrastructure. Very laser focused, like a Stripe in the early days. Now Stripe also has some level things, but like the infrastructure part is our core focus. So that is very attractive to companies looking to build, where you're not kind of building an API as a side product next to like a money movement app, but you actually build API as your main product. And the main value for them is like the full suite of, they have a regulated partner, infrastructure, the stablecoins, fiat to stablecoin, stablecoin to fiat, and third-party payments. So I could, for example, as a business, do payroll and pay contractors, and also larger B2B payments. This focus on the infra layer and also the enterprise layer is also very attractive to companies and larger corporates that say we want to move larger amounts of money. Can you deal with that? Can you help us? For example, trade finance. Can you help us with working capital? So these are all things that like we can build or co-build together with these customers. And the thing is, like, the space is actually pretty unsolved. There are like a couple of players that, touch each part of the stack, but not many that do all of it.
Yeah, a lot of that list you said. So like wallet infrastructure, custody, fiat to stablecoin on-ramps, stablecoin to fiat off-ramps, payment acceptance from third parties. These, in some ways, these are all, when I'm looking at the industry, these are like, each category might come with their own business that is out there specializing in that one thing, at least from my vantage point. How are you thinking about strategically for your business? Are you guys, partnering or working with certain players in that space who specialize in those areas, and you're sort of aggregating them together, maybe in the short term? Or are you really focused on building all of those things as a core competency for your business, or maybe a little bit of both? I'm curious how you think about that right now.
So there are parts of the stack which we're happy to partner. So for example, on the wallet infra layer, there are a couple of companies that service that market. Actually, quite a lot of companies that service the wallet infrastructure stack. There we're partnering with one. Then everything around kind of compliance, transaction monitoring. There are companies like TRM, Chainalysis, which like everyone knows these companies. There's TFR, requirements, which basically means like you need to prove the ownerships of wallets. There's a company called Nota Bene, also Coinbase Trust. So with these parts of the stack, we're actually relying on partners who do their job really well. But most other parts of the stack we're building in-house. Back to the every bit matters point. The more the more you rely on like market makers and exchanges, etc., the more money you give up to partners. And payments again is like another huge margin business. So you really got to be careful that you don't utilize too many partners. But when it comes to infrastructure, especially regulated infrastructure, there where you need like very proven partners and teams, we're happy to utilize that. But we're very careful as to how enterprise ready these partners are. Because when you go to a larger bank, you do not want to, not pass these compliance and DORA requirements just because you use a partner which is not to the task. So the interesting thing is when it comes to stablecoins, I think this sounds like a pretty broad use case set that we're building here. But stablecoins make a lot of these things easier, right? So they give you almost like banking as a service out of the box. You get the ledger on-chain, you get transaction history, you get all these things pretty much out of the box. One thing that's where we're building something really proprietary is confidentiality to enable confidential payments, which we think down the line is going to be a huge part of the value chain when it comes to serving institutional use cases. Many of them say lights are going off here. We can't deal with we can't deal with like everything being public on chain. So this is something we're putting a lot of effort in. We've been, as a team, core contributors to the Solana confidential token standards as part of actually Iron Bank, which also had confidential balances. So this is where we're investing a lot of time in.
Let's dive into that a little bit. So, and maybe just more broadly around what you're hearing are must-haves from these institutions. Confidential payments, obviously a big one. And I think when people might hear that for the first time, they might just instinctively think, oh, that sounds a little sketchy. Why are people trying to hide their payment details? But it's actually just, I'm thinking about all the conversations I had while selling payments at Coinbase. And this is like really just very standard institutional expectations. Like if there was you could go to, a public wallet address and see how many assets were being held or payments that were being sent and data around that. That's incredibly like sensitive information. And so I think when I hear that is from an institutional lens in many ways, just, table stakes to using something. What other things are you hearing? I'm sort of guessing there might be some requirements, like you said, around the wallets, the compliance, like what other things, when you're talking to these 100 companies and really the ones that you want to work with in that stack, what are the things that are must-haves for them to feel comfortable using this solution, like confidential payments? What other things?
Yeah, so a solid set of banking rails. So you need to have partners where you can ensure that transactions are delivered. And this is something that to some outsiders seems like trivial, but it's very hard because especially when transaction sizes gets larger, you need to have very solid banking relationships in place so they don't block your payments or block you even as a provider. So that's really important, which is a big problem in the industry. You see a lot of companies that claim, we can do global payments, but then you're realizing, well, there's 3 asterisks that say, well, not quite, right? There's a certain limit, 100K a month limit, right? Like, which if you go for institutional use cases is, completely ruling everything out, right? Like that's not even one transfer. So that's important. And almost it's like, understanding of regulatory requirements when it comes to, dealing with partners that are itself regulated. You need to understand like how do these businesses operate? Like which stablecoins can they use? Or what reporting requirements do they need for the internal compliance? You also need to be compliant with TFR, transfer of funds rule, AML, obviously anti-money laundering, all these kind of table stakes things. Need to make sure that like you take them seriously and you can prove that you know the space well and you understand every part of this transaction flow and how it fits into their specific requirements. And I think those are the majority most important ones. And then it comes to other things like, for example, third-party payments. Third-party payments means like a business pays someone else. It doesn't pay itself, which is off-ramp, but it pays someone else, which is a third-party payment. And again, not all payment companies can do that, right? Because it requires good banking partners you work with, but it also requires processes So you can prove what's the source of funds, like where does this payment go to? What's the purpose of the payment? But it's really critical, right? If you want to do payroll, you can't deal with a company that only allows off-ramp. So these are sort of the mission critical things. And then there's certain geographic coverage. We haven't spoken about this, but like one part of our offering will also be orchestration of multiple vendors around the world. So Bridge in the US, Yellow Card, Fuse, like all these providers, like the local versions of bridges around the world. And we would also enable an orchestration layer that like routes payments between these providers. In Europe, we would kind of do all this ourselves, given we're we have a full setup and relationships here, but in other jurisdictions, we would rely on partners.
Makes a ton of sense. When you're thinking about, this is a space that I've been thinking a lot about, is this orchestrations piece, because you have to actually get money back into the banking system to get these banks that you're talking about. Like you said, in the US, it's pretty much Cross River Bank and Lead Bank that are holding a lot on their shoulders here in the US, if we'll put it that way. But in the EU, it sounds like it's a little bit more broad, diversified. There might be more counterparties in the banking system that you need to go out and individually work with. I've heard that just because of that, it can be incredibly difficult and nuanced, and to set up those types of relationships all over the EU can be a huge challenge. And it seems like there's a lot of demand for what you're saying, where companies that are either, based in Europe, or they have their users or their institutional partners in Europe. That seems to be a really big pain point that I'm hearing in the industry right now. So what is that like for you? What's the journey currently what does the process actually look like? Are you calling these banks? Are you walking into these banks? How are you forming these types of relationships and convincing these counterparties to trust you? Because if at the end of the day, if we can't get stablecoins right now back into the fiat banking system in a super scalable, frictionless way, in many ways, these companies aren't gonna adopt something like Iron yet. I'm not finding that most companies are running their business fully on chain yet. So this is a really key piece. So how are you doing that, and what's that journey been like right now for you?
I mean, the journey around building a bank in the first step was actually really helpful for this, because we talked to most banks in Europe that have a crypto agenda at eye level. We're like, okay, so we're building a on-chain bank, fully licensed. Let's talk how we can work together. We even had this idea of kind of a multi-bank network, because one of the big problems is still, for market makers, for example, to get money, move from bank A to bank B to bank C. I mean, yes, we have SEPA instant transfers, but they're limited at a certain amount. If you want to transfer like $1 million between banks, it takes time, right? So that's why there are like instant settlement networks like which used to like Silvergate Exchange Network in the US, which used to be. There are the likes of that, like also propping up here in Europe with Blink and Pulse from Bank Frick and BCB Group. So we know all of these bank execs that deal with the crypto parts of these banks or these banking providers from sort of from a different time, right? So it really helped to kind of like work on this agenda together. And now like being on sort of the other side where we're a payments company and actually need to have them as providers, they're very open to talk because they see us at eye level. So that was one thing that really helped. The second thing is I'm having worked for Börse Stuttgart, again, which is like a very large stock exchange here in Germany. One of the core parts of the crypto exchange that we built was actually working with banks to enable them to offer Bitcoin buying and other services for their customers. So I talked to a lot of banks in this part for an integration. And again, like the Börse Stuttgart name in Germany, quite well known, it really helped. I've been in this space for many years and like nurtured these banking relationships here in Europe. So from that angle, we've been quite fortunate from a positioning point of view. And I also think it's a pretty big moat down the line, what kind of relationships you have. Also like the types of companies, low positioning in the market that we want to do as or service Iron. It's not the higher risk end of the market. And a lot of providers would tend to like go for like the higher risk remittance flow and sometimes gambling or gaming and kind of Forex industries. So we stay away from this market segment, with Iron just focusing more on the enterprise scale use cases, which really helps stay very clean when it comes to like establishing banking relationships. Because this is like a marathon, right? Like, yes, there's a land grab the next like couple of years, but over time, like if you have the large bank partners in an Iron and you can do 100 million transfers like not 100 million units, but actually 100 million euros worth of transfers in a single transfer, you need like super strong partners on the banking side to do that. And this is something that's top agenda for us.
Got it. My brain is churning with so many questions right now. It's cool to know that, the 10-month journey of, trying to build Iron Bank wasn't in vain, in a sense, where it's actually positioned you in a way to form a lot of these relationships that can accelerate this forward. What would you say, I'd love to dive a little bit into the on-chain payments stack and how you think about, for this enterprise use case that you're talking about, maybe less focused on Forex, remittance, gambling, these higher risk industries, stay away from that. But for the on-chain payment stack, what are you seeing as the core use cases that you are excited about? The things that maybe some of the group of 100 companies that are coming to you, and you're looking through this inbound list, right? And you're looking at these companies. Which are the ones that you're like, oh, wow, that's like exactly what we want to be doing? What, if you're even able to share, probably not able to share publicly who they are, but what types of industries they're in, what sort of use cases are they solving for that you feel like, at least right now, you can really, really serve well?
Yeah. So I'm excited by things that like the market today doesn't cover yet, right? Like I think like the smaller SMB remittance space is very well served, right? Like not just by Wise, but by number of players that service that market, and not just with stablecoins, but like you have like other means also to do this flow, and stablecoins are a fantastic use case for it. But I also think that like over time, like these classic players like a Wise, etc., will start adopting stablecoins, although they said they won't, but I think they will. I mean, let's see, the jury is still out there. What I'm excited about is, for example, a major bank approached us and said for their treasury customers to, move money across the world, and that's, very sizable big corporations, they want to explore stablecoins. And this is not something that is pretty visible on the outside, right? Like you would not know as a treasury customer even that like this large bank in question would utilize stablecoins. It just be faster, it'll be cheaper, and also more visible. Visibility is really critical here. So if you transfer a large amount and it's gone for like 2 days, stuck in correspondent banking mazes, this is not a good experience. So I'm very excited to like almost co-build these solutions and like go in there, understand like what are the requirements, how can we make this work, how can we help you? And we have obviously very deep understanding of like this on-chain payment stack, which is wallets, multi-chain, bridging, gas-free abstraction, all this stuff that sounds very trivial to someone that lives on crypto Twitter, on chain, like this is all solved. But actually, if you go for more enterprise use case, it's not solved at all, right? And making this all in a way that it's compliant with guidelines and scalable, that is the most exciting thing to me, where I'm like, okay, let's really build very like big enterprise focused use cases. I think there's also like a lot of these like companies that approach us are, even like on-off ramps that need new B2B focused rails. And you would know all these names that are on this list. And then also stablecoin payment service providers, stablecoin PSPs that need Euro rails. I'm excited to work with them and build because they're kind of very crypto forward, but more excited about like use cases that are going from 0 to 1, literally enabling stablecoins for someone that hasn't done it before.
And that 0 to 1 use case in your mind is really focused on this institutional, maybe treasury or large scale money movements, it sounds like.
And fintechs, I haven't talked about this. Like this is fintechs that say, we want to actually enable or build on top of stablecoins, build entire banking services on top of stablecoins, or incorporate it in such a way that it replaces their classic banking as a service infrastructure. So granted, we didn't have that many of these conversations because it's quite early, but I'm quite connected in the fintech world, and now a lot of founders are thinking about this as a potential future rail. And I can see this as like a big segment that will come maybe, 18 months, 2 years from now, something like this.
Yeah. So at BSDX, you were working with these maybe same banks or similar banks to enable, for those who might not be familiar with like the introducing broker model, where you can open a banking app or a fintech app and what looks like you're buying Bitcoin from them, you're actually purchasing it from an exchange or a third party, and that bank or that institution is sort of buying it on your behalf, and it's all very white labeled. It sounds like that was what you were doing in that moment, which sounds very similar to what you're doing here, but instead of maybe focused on the acquisition or the exchange, maybe for a retail user or institution, exchange of crypto as an investment, it's similar but different, where it's more of the large scale treasury movements of, I'm imagining a multinational company working, maybe based in Europe, headquartered in Europe. They have the subsidiaries and accounts all over the world where they're doing business that all need to come back into like a central place, or the opposite direction. Talk to us about historically or currently, if that treasury flow, what does that currently look like, not with stablecoins, for those businesses or those banks, from a timing, cost, what's typical there? And then with Iron instead, walk us through at a high level what is actually happening. I know there's probably a lot there, but would love to do that little compare and contrast of the existing state versus what you guys provide.
I mean, it really depends on like the jurisdiction you're talking about. Like, I mean, there are like large countries where money is transferred pretty instantaneously, like euro to US. Like if you have a very professional treasury setup, like a Siemens or, like a Volkswagen, like these large companies, they will have very, very sophisticated treasury desks that can move money very, very effectively. Once it starts to flow to more emerging markets, the global south, things start to become more complex. And that's also, for example, the reason why SpaceX used Bridge, right, to pay some suppliers. I don't know whether they did payroll. I think it was mainly for supplier payments to LATAM. So, this is more of an emerging market problem rather than wiring money between more established banking systems. That can also take time for a retail user, but for most companies, it's actually pretty solved. Like if you talk to large banks, like JP, Deutsche Bank, Citi, etc., they'll have setups in both countries and they can co-settle and be very efficient with this. But where it comes to like stablecoin usage, where it really becomes powerful is, Africa, Europe, APAC, Europe, LATAM. And there it can be, 2 to 5 days sometimes, and can take, or even India, like US, I also heard like it can take, 6 to 8 days and cost up to 10% in transaction fees, which is really crazy. So I think that's the corridors where stablecoins really unlock very tangible value, both on the cost side and on the speed side. And it doesn't also mean you can use it also between Euro US, will also happen a lot. But I think the big unlock will be emerging market.
So you're saying instead of money maybe bubbling up from these really like established global economies like the US and EU, the real value right now is, are you seeing it more money going out, like for payroll payouts, contractor payments from like a US or EU down into that emerging world for those types of use cases, or maybe both? Like, are you seeing it both ways, where there's also a payment acceptance use case coming back to those economies, or is it mostly trickle down for payouts or payroll or things like that?
I would think it's out, but since we're not live yet, I can't tell you like the full nature of the flows. So let's talk again in like 2 months and I'll tell you exactly. But like my gut feel would say like it's out where you do supplier payments into these countries. I mean, we also at Ultimate paid a lot of companies and suppliers and USDC, right? And that was often just very smooth. But yeah, we were on the like fully in the on-chain world, and like the acceptance was also way simpler because people were very fine to receive stable coins and not fiat.
Yeah, really awesome. And we'll have to do this again then. I know we don't have a ton of time. We can start wrapping this up here. This has been really great. We'll definitely do a part 2 to this. You said a comment earlier that I wanted to just dive a bit into. You said in your history of starting and building products, you said it's not always the best product, but the best go to market. What did you mean by that? I'm curious what that comment meant in your mind.
Yeah, there is this saying, build it and they will come. I think it was like a movie with Kevin Costner. I forget what it was. Field of Dreams, I think it was called. So where you always fall into that same trap. And I felt, in it a few times where you build a product for yourself as a user, as a B2C user. It's a fantastic product and there's likely a lot of demand for it. But if you don't know how to get to that audience, or if you get to that audience to build the proof points fast enough, because attention spans are super short, right? Like people don't spend a lot of time reading through your website, your claims, etc. They need social proof, meaning other people that use the product. They need someone that either refers you or tells you about it, which carries network effects. And it's extremely hard to unsettle those, right? To unseat those big incumbents. So that's why look at yourself. How many new products do you use and then continue to use like 3 months later? It's very few, close to none. It's extremely hard to like get people to switch or to adopt new products because there's only that many amount of minutes in a day that you have attention, and you probably spend it on, most of the products, and specifically when it comes to money, like trust matters more than UI, right? Trust when it comes to non-custodial wallets is the most important thing. So a mistake pretty much every founder makes is that you never really think enough about like, okay, product's done, everything is ready. Now, how do I get it into people's hands? And then, how do they actually turn into users, paying customers, and use your products over others? And that's a really, really critical thing to solve. And you have to like force yourself to think through it, because it's always very fun to think about your product and like new things you can build. But the go-to-market oftentimes is unsolved.
It sounds like you might have learned that the hard way in the past.
I did, absolutely. And that's why, we had to pivot a few times, and, it's extremely difficult. Like, and it's not just money that solves this. Basically raising a lot of money often doesn't help, right? Like even in the B2C world, like you can, but then you need a lot of money to like buy users and continue to do it. So yeah, I learned it in the past, but I still tend to make this mistake sometimes because it's very hard to like get it out of the system.
Yeah. Well, it seems like you've done an incredible job at what really is just a beautiful landing page at this point and an access button, getting over 100 companies that sound very legit and very serious about working with you interested. So you're definitely onto something. And for those who aren't following you on Twitter or LinkedIn yet, I highly recommend it. You are constantly putting out really insightful content around this space, so it's been really fun following you. We probably don't have a ton of time for rapid fire questions. I like to typically end that way, but just ask you a couple things. What's a company? I know you mentioned a lot of different companies or partners within Iron that you are working with or closely following. What's another founder or team that is on your radar right now that you really think is doing great work, maybe emerging work that the industry may not be aware of yet, that you want to give a little special shout out to? I'm curious.
I give him a lot of shout out. I think Ryan from Dakota is doing an amazing job. Like I like this onchain bank thing. So it's a really good product, which I like a lot. Yeah, really good product. I like it.
Yeah, we for our company, Stable Studios, we finally got onboarded to it, and we sent in our first wire. We're using it. It is really cool. Ryan is on the podcast as well, a part of this first season. So,
but there's one other which is related, is Squats. So I know Stepan the founder really well, and I mean it's a beautiful product. It's sort of a B2B version of what we built with Ultimate. It's basically an enterprise wallet for Solana users, and yeah, it's just a fantastic execution there.
Okay. And on Solana, what's one specific thing about Solana that you find unique, or sounds like you've gotten really close to that ecosystem? You've built really compelling products with it. For those who may not be familiar with Solana or considering building with Solana, what is the thing about that ecosystem that is specifically attractive to you or gets you excited?
So funny enough, we just spoke about go-to-market, right? So Solana really nails this well, both in terms of brand, but also in terms of their outreach to builders, to enterprises. So they have a Solana institutional segment by Nick Dukov. Know him well, does an incredible job of just kind of networking with the big companies like, Visa, PayPal, etc., and getting them to commit to this ecosystem, which frankly is hard, right? Like this is still blockchain and, new stuff. But Solana is really fantastic in executing this growth strategy over above what other companies are doing, and very much also with like TradFi companies and getting them on chain into the Solana ecosystem, which is why I'm so bullish on this, right? Because liquidity begets liquidity. And if we go to large enterprises and banks and customers and say, well, look at Visa, they're using it. Look at PayPal. They're like, okay, social proof, as I said before, checkbox, we're done. That makes my life a lot easier to selling that ecosystem. And that's why they're going to win.
Awesome. Final thought for the listener or audience here about Iron and what you're building. Any final thoughts you want to leave the...
Yeah, I mean, if any one of you thinks about building anything on stablecoin, don't know where to start, we can do pretty much all of it for you when it comes to fiat interoperability, wallet, payments, even if you just want to talk about stablecoins and the future of where they sit in the financial stack, hit me up. Always happy to chat.
That's awesome. I have so many questions about the wallet side of how you've architected that, but we'll have to push pause and save that for another day.
That's going to be number 3, yeah? So we do 2 more of these podcasts.
Max, this was really fun, man. Thank you for taking the time. We'll have to do it again soon. And yeah, really appreciate it.
Likewise. Thank you very much, Bruce.